Hey, my name is David Olds, and I am a 20-year real estate investor, 21, 22 years, I forget, I start to lose track. I'm based out of Chattanooga, Tennessee, and I've done over 1,500 wholesale deals, dozens and dozens of rehabs, had over 100 rental properties, and my goal with this channel is to help educate you on the best way to make a lot of money in real estate. So let's get started. Let's talk about rental properties and should you buy a rental property? Without question, I'm going to say yes. 100%. The way to get wealthy in real estate is by holding long-term assets. And long-term assets typically are rental properties. They can be single family, they can be duplexes, quadruplexes, apartment buildings, commercial, but some type of real estate where you are going to purchase that property, put a tenant in there who's going to pay you money every single month. Commercial properties qualify as that. You know, Walmart would be a great tenant. Single families, quads, duplexes, trailer parks, storage units, anything like that. Typically where most people start are single family rentals because it has the lowest barrier of entry. There are lots of ways to buy it. Even if you don't have money, if you've got a little bit of credit, you can get bank loans. You can use real estate institutional funds. Basically, those are companies that exist just to lend to real estate investors. So they're not quite as strict as banks. But, remember, everything is good and bad. The bad side is they may have a little bit higher interest rate on the front side. Why should you buy a long-term rental? Well, what's going to happen? And this has been true for the last 100 years. If you go back 100 years, 80 years, 70 years, whatever it is, and you can Google search this. If you want to put me on pause and go Google it in another window, that's cool. But real estate values over the last 100 years in the United States, if it was a graph, they go continuously up to the right. Over and over and over again, things just get more expensive. Things are not going to crash. There's never going to be real estate lose, 50% of its value. People that say that are talking out their ass. They don't understand. Are there real estate cycles? Sure. Are real estate values plateau or even drop 10%? Absolutely, right? But over time, those real estate values are going to continue to climb. Even in the Great Recession of 2007, 8, 9, 10, coastal cities like Miami, maybe condos dropped 30%. Immediately, they bounced back as soon as the economy came back, and now those properties are worth 3 times as much. Long term, the values are always going to go up. So that's the first thing, right? If you can buy at any kind of a discount, let's say the value is $100,000 and you can buy that property at $60,000 or $70,000 or even $80,000. If you can buy it at a discount because one, you can close quick, maybe it needs a little bit of work, maybe the seller just needs to sell quick, you have the ability to buy that asset at a discount. That's first, right? You can't go buy stocks at 30% off. You can't go buy Bitcoin at 30% off, right? None of that exists. But you can buy real estate at a discount. So that's number one. Number two, we're going to put some type of a tenant in that property. Now, what you're looking for when you're going to buy a property that's going to have a tenant is, let's say my mortgage is $500 a month, but I can rent it for $800 a month. Is that a deal? That means my mortgage is $500, that includes taxes and insurance and principal and interest, right? PITI. And again, we're just using made up numbers here. Let's say it's $500, that includes all that stuff. And what I say, rent it for $800 or $900. That difference between what the rent is and what your cost basis is going to be, let's say $300. It's $800. So is that a good deal? Yeah, I think $300 a month is good, as long as you didn't have to put a huge amount down. What you need to consider in there is what other expenses might you have? Are you going to hire a property manager? A property manager might cost you 10% of the $800, so that's $80. So that might eat into your cash flow a little bit, but that's okay because now you have somebody else managing the property for you, and it can almost be a passive type investment. It really depends how you're going to manage your property. For me, and this is the way that I ran all of my rentals for a long, long time, it didn't necessarily matter to me that I had a lot of cash flow because I wasn't buying the rentals to live on the cash flow. We were operating a very successful wholesale company, so I was getting lots of money from my wholesale company. The rentals I was just trying to pay off just as quickly as I could so that I could get them to the point where they were free and clear, and we'll have that in probably the next 5 years, I think. All of our rentals will be owned free and clear. So should you buy rentals? Yes. Buy stuff today, and in 10 or 15 years, you will see that it's 3, 4, 5x in value as well. Because history has told us that these properties continue to go up and up and up. You should always be buying rental properties. Make sure that they're going to cash flow. Whatever that tenant that's in there is going to pay you enough money to offset your expenses, and then you're going to have a little bit of money to put in your pocket. And I wouldn't spend that money necessarily. I might put it into an account because things happen with rental properties. right? You're going to have to maintain it. It's going to need a new roof. It's going to need a water heater. It's going to need those things. So rental properties are not a get rich quick scheme. It's kind of a long path to wealth, but having one rental property, not going to make you rich. Having 10 though, right? You start to have 10 at $300 a month. Now that's $3,000 a month. Now you've got some income coming in that you can actually start to live off of. Here's really the beauty of it. And I wish I had a chart or a whiteboard here to draw it on. You know, that mortgage is going to stay stable, right? For the whole length of your loan, whether it's 10, 20, 30 years, but that rent is going to continue to go up. So even though today you may be making 300, right? I want you to picture down the road, it's going to go to 500, 700, 800, $1,000. Like, because rents are going to keep going up because they do just like property values, and your mortgage is going to stay stable, you know, that cash flow is going to continue to grow. What you're making today is not what you'll be making in, you know, 5, 6, 7, 10 years from now, right? It's going to continue to get bigger. So that cash flow that you may think count on to being 3,000 could end up being 6, 7, $8,000. Rental properties are fantastic. If you don't want to deal with tenants, you know, tenants, trash, and toilets, you can 100% outsource that to a property management company. They will certainly take all the calls from your tenants and make all of the repairs. You're going to pay for that. You're just buying your time back so that you don't have to be doing that type of stuff. I'm not an accountant, but there are so many tax deductions that you can take with having real estate that, you know, will really help offset active income. So rental properties, 2 thumbs up. Definitely, I suggest that you buy some, you invest in your future, buy and hold for the long term. We'll see you on the other side. If you like this, make sure you hit the like, subscribe, follow, notifications, all of those buttons, and we'll see you in the next video.